Well,
Muted again.
there we go. Let's go.
Welcome everyone to Office Hours for TradersPost on this November 26, 2024. I'm part of the marketing team here, Tom Hartman, alongside CSO Mike Christensen. How's it going, Mike?
Doing well, Tom. How about you?
Good. I always say the date at the beginning of these videos, not because anyone needs the date, but because I forget what day it is, what month it is, and this is like the only time I actually check the calendar. It reminds me of. So when I say the date, I remember all the things I need to do.
The good news too is that now not only does YouTube know the chronological order of our content, but for those that are going through the history of all of our shows, you'll always know when this actually showed up, because eventually the stuff we say now isn't going to be relevant in 3 months when we make meaningful improvements to the software and your question is not the same anymore. Hey, do you guys support this? No, actually, now we do.
That's right. So it's been an interesting week, fun week. Even though it's just Tuesday, I am looking forward to. You guys are doing Thanksgiving, right?
Mm-hmm.
Are you going to be here on the Thanksgiving show? I can't remember what we decided on.
I put maybe down. Let me just see what my afternoon looks like. If I'm already, getting started on the drinks by noon, which is likely for me. If bourbon gets opened on in the afternoon session, I don't know. Does everybody want me to show up with 3 bourbons deep? Let's see.
Well, one, yes, but two, I was like, oh, it might be fun because it's a holiday and people are going to be off. I don't know if Peter could hop on while I'm doing the coding for the trailing stops and all the stuff we talked about last week. I thought it might be fun to introduce him if at all.
If I'm going to be, let's definitely bring Peter on for sure. If I'm going to be on, it would be from my phone though. So I will, I might make an appearance. Let's put it that way.
Excellent. And I promise, even though on our Slack channel, I've been, what's the word? What's the polite word? Duncan on MSTR, because MSTR is down 33% over the last couple of days. Mm-hmm. I promise Friday's show won't be all about that, unless something interesting happens. Something interesting happens with MSTR, in which case I'll bring it back up.
I'll tell you what, now that we've sort of been keeping an eye on MSTR, you've got me measuring it. And the moment I start measuring it, I start finding entry zones. So it could be an interesting short-term play. We'll see.
Calls on MSTR. Excellent. So I just wanted to, one announcement for this week. We want to let everyone know, if you haven't been following our social media campaigns, you haven't seen the email, we do have a special going on right now, a discount for Black Friday. So that is a beautiful 40% off of the annual subscriptions for subscribers. This is like our biggest discount that we ever have all year. And this paired with the TradingView discount, now's the time to be racking up all your subscriptions for the year. I know I never miss out on all my Black Friday sales. I always have them queued up, ready to go, ready to push the button. And so TradersPost should be on that list for you guys. I know there's been a lot of interest. People have been, it's interesting. Leading up to Black Friday, everyone keeps asking, are you guys have any deals? Are you going to have any deals? Are you going to have any deals? And, it's our policy not to just go around talking about deals all the time, but all it takes is just looking every year at what we do. And we also have a Black Friday sale. So
we've been consistent with it. And we can probably publicly say at this point that we do try to align our promotions with TradingView and with TrendSpider, because we know that you're trying to keep your costs as low as possible so you can make as much profit in your trading as possible. So we'll continue to do this going forward and make sure that we're aligned with all the tools that you use. We get it. Trading software is a cost. It's a cost of doing business. Hopefully, if you're running a successful enough organization trading in any market that you trade, you've figured out how to offset some of this cost as an expense that you can write off with the tax man. So we hope to make it to an operating expense on your side at some point.
Excellent. All right, so we have a crop of questions this week. Let's start off with this one. Someone was asking, I have 2 different accounts. Let's say 150,000, 150,000. Both are on Tradeovate. Am I able to use strategies on both? Do I need to change anything?
Yeah. So I answered this question yesterday. I'm glad you brought this one up. This is an interesting one because there's a lot of different nuances to the question. The person who submitted the question followed up and explained that it was for 2 different prop accounts, but that even more important, he wanted to trade, or they wanted to trade NQ contract on one account, on the $150,000 account, and on the smaller $50,000 account wanted to trade MNQ, which totally makes sense. It's a much larger account, so you have a lot more room for error and for margin requirement. In that case, you would need two separate strategies. And the reason for that is that if you send a signal in to trade NQ, it's going to try to trade both accounts on that NQ contract. So you would actually need to make a strategy that sends a signal for the smaller contracts and then make a separate strategy for the one that trades the larger contract. And then in theory, if you have, let's say, 3 or 4 $150,000 accounts, you could connect all of those accounts to the same strategy that trades NQ. And then maybe you have 3 or 4 or 5 $50,000 accounts, you could connect all those accounts to the smaller strategy. So what that means is that it kind of scales out from the account size and the contracts that need to be traded. So you have 2 strategies and potentially 10 accounts connected to TradersPost, and all of those are trading at the same time.
Excellent. I mean, classic use case for TradersPost. What makes it so valuable to so many people?
For sure.
All right, next up, I'm trying to use TradersPost to connect to live Binance broker. I finished all steps to connect and ready to submit order. When submit order on TradersPost, I get the following error: failed to enter new position. The broker API did not return a specific message, but we detected that the access token has expired or is invalid. So I just wanted to bring this up because this actually happened to me. And there was a change recently. Well, first of all, there's 2 things you have to make sure you're doing with your API key from Binance. One, you have to make sure that you have the right assets that are allowed to trade on that API key. So whether it's spot, futures, you have to activate that per API key, or rather per sub account, to make sure that your API key works.
We should also clarify that we only currently support spot. So when you do enable that tradable asset type, just make sure it's only spot that you select.
Perfect. You also, and I believe this was a change that was recently happened, because this is what Binance support told me. And by default, the API keys are restricted to a whitelist of IP addresses. And before, it wasn't the case. So you just create the API key and use it wherever you need to. But now by default, I have it on. So you have to go and you have to deactivate that on the main account, because I highly recommend people use sub accounts when you're using your crypto accounts. Use sub accounts for specific tools, just like you might have separate APIs for different applications. And so this option to restrict it to a specific IP address is activated by default, and I have to deactivate it on the main account. And then I was able to go ahead and send trades in. So it was confusing to me, because I was like, the API key is fine. I just created it. It's not expired, and I was getting this message. But you can't really detect that through the error code that's sent from Binance. So it makes sense that on TradersPost you don't get that information. But yep, it's useful to know. And it was only a recent change that happened on Binance like a couple of weeks ago where they did this.
Okay, cool. Yeah, thanks for that context, Tom. It's tough for us to keep an eye on all the changes that occur at the exchange level. So this sounds like a recent change that we can document a little bit better within our documentation. So we'll do just that.
Oh yeah, actually, yeah. I'll make a post, submit a request for that. I was very happy with that account, because that's the account where I'm doing for the client, where I'm doing hundreds of crypto tickers being bought and sold at the same time. I wasn't sure how that was going to go, and the account's up. It's been up since, even with the down moves in the crypto market, the account still trends away. So I'm really happy that I had TradersPost to handle the heavy lifting of managing all those different positions, as opposed to me having to write the code for it. I was pretty happy.
Love it.
All right, next question. I'm trying to use TradersPost to next one. I have the same futures ticker on multiple subscriptions and strategies. I have an ES strategy with its own subscription, and an ES regular trading hour strategy to scale up when there's less margin, when less margin is required. Each has its own subscription to keep them separate, and possible run different take profits and stop loss exit strategies. My orders are rejected because there is an existing position, even though the position is in a different strategy. Is the ticker position tied to the ticker and not the strategy, and subscription segregated? Yep. I could allow positions, blah blah blah. So basically, the idea here is that is there any do strategies interact with each other if they're dealing with the same ticker on the same account?
Yeah, that's one of the common conflicts that occur within TradersPost accounts. Essentially, a position refers to any open quantity of a single symbol within your account. So if you have two separate strategies trading the same symbol, you're going to run into a conflict because we treat a position by the symbol name. The only way you would be able to avoid that conflict is if you were maybe trading a different expiration date in the other account. So maybe you're trading, ESZ 2024, but then ESH 2025 in another account. In that case, those are two separate symbols, so it's not going to cause conflict. But when you're trading the same symbol across multiple strategies, we look up the quantity you have with your broker to determine position size and to determine what we should exit if you send an exit symbol. It's both a benefit and obviously a downside depending on how you trade. If you're trading and you want to, enter a scaled position that changes its quantity over time and exit that position over time, it's a really nice feature to have because we always look up your position from the broker or from the exchange in order to determine what we need to liquidate. In this case, though, when you're trying to share the same account with two separate strategies, you run into this position conflict where we already see that you have a position from another strategy. So we always recommend that you separate those strategies into different accounts. And many of the brokers will allow you to have multiple accounts. So it's just a little bit of a maintenance hurdle to get the other account sequestered and, off to its own, into its own section, move a little bit of cash over there, and then you won't have that conflict anymore.
Let me ask you this question, this tangential question, Mike. As you've engaged in crypto trading and in equities trading and in futures trading, all of these different things, is there, when it comes to traditional trading, do you prefer, or do you think that people will lead more towards the crypto markets or the equity markets? Do you think there's like a possible preference that one would have over the other in aggregate for the entire retail trading community? Because I find that the crypto market has you have all this flexibility of fractional position size, and by default you have implied leverage. You have leverage, and then you have like these high vol assets. You have all this different exciting possibilities of making 10x on a trade immediately. Whereas in the equity markets, you're sort of like, you're really happy if you made 8% that month. Like that's a pretty good.
In a
Whereas
month,
the crypto market,
I'd be very happy with 8%
right?
a month. Yeah.
Whereas in the crypto market, they wouldn't even get out of bed for 8%. And so, depending on the trader. So I'm just wondering if you had to choose one market or the other, what do you think is the best for a retail trader?
Oh, that's a lot to unpack. Okay, so in theory, the best way to think about this is from the capital market line, where you start from the most risk-free perspective possible, which would be treasury yields. And then you start to observe what we call the equity risk premium, which is how much more can stocks provide relative to the risk-free rate? And is that a large enough premium to make it worth it? Right. So that equity risk premium right now, I think it's somewhere around 3%, where generally you're going to get enough upside that it's worth the risk of downside. I think that same concept can be applied to crypto, where I would refer to it as the crypto risk premium, where I would expect the risk of crypto to be significantly better than equities so that I'm not placing my money unnecessarily into a market that is going to give me diminished returns. And that's obviously a timing problem in crypto more than anything, unless your horizon for holding is like long enough to deal with these upswings. My main problem with crypto is that when it has a downswing, the downswings are huge compared to other markets. They're 75, 80% drawdowns. And depending on how you're holding that position, we know how asymmetric returns are in markets like that. With like a 90% drawdown in your account, it takes a 1,000% return to get back just to break even of where you were before. So if you're capable of managing drawdowns well, and you have a strategy that doesn't experience the same volatility that crypto does from a drawdown perspective, then it seems like a very fascinating market to trade. But just like leveraged futures or any other high volatility asset class, you just have to be aware of what you're getting involved in. While your chance of upside is greater than equities or even treasury yields, your risk is a lot greater as well.
So if my sons, I'm trying to get them into crypto trading, because it's so easy to have something that to put $50 inside of an account for them to trade it, and there's live money involved inside of it. But I can't get them to trade penny stocks on some pharmaceutical sector. They're not going to care about any of that stuff. And plus, then you have there's so much hype, there's so much publicity within the crypto space that makes them more excited to learn how to do this trading, whereas I could not get them excited on call options on MSTR, even if it's gonna like moon.
I do think you're calling out like a good point about the approachability of the crypto market relative to traditional markets, because there's so much baked into traditional markets that is over a lot of people's heads. They get involved and they're like, we only recently came up with fractional shares, but even share size was this problem where people were like, well, I don't have $1,500 to buy a share of Google. So show me the cheaper stocks that are out there. Right. So fractional shares was like a problem. But even like stock splits and dividends, there's like so many different facets of the way equities trade and the rules around them and what you actually own in that case. Should I look at ETFs or should I look at OTCs? Should I look at, individual stocks? Should I look at small caps? Should I look at large caps? I totally understand that there's just this overwhelming breadth of information that needs to be learned in equities before you feel a lot more comfortable about trading in that space. And in crypto, it's like, well, we know we have the meme coins and then we got the big coins, the big market cap coins. It's a little simpler to understand. People kind of get where the price action goes. You don't really have to focus so much on fundamentals. I'm still going to make the case, as we do in our show on After Hours, that there's not a connection in my mind between the fundamentals and the actual price action. So it is more attractive because it's simpler to understand, but I really think the market's in it because it is exciting. It moves fast. It has more volatility or more beta relative to the stock market. So anytime price moves fast, people are going to get excited. I mean, there's a potential for a lot of profit there. Anyway, moving on to this other question.
Yes, Sarah had a question here. Do we have a time frame for Forex support?
We do not. We would like to announce a timeline soon. We're definitely looking at it in 2025. We would, it is absolutely something we want to implement. We've been working pretty diligently on the crypto side of things, and we do want to explore crypto futures because we know how big of a demand there is there. But at the moment, I actually think that our Forex demand is greater than even our crypto futures demand. So we likely will be visiting that sooner rather than later.
Yeah, trust me, they talk about it. It's on the radar. Excellent. All right. So next up here, what happens to my open positions if my TradersPost account is suspended due to missed payment?
Well,
we allow exit signals to come through.
Well, yeah, exactly. Your signals will be disabled, but your open positions can be closed with your broker. Remember that we're basically sharing access to your broker account, so we can trade on your behalf, but you always have the ability to go straight to your broker and manage those positions. So if your subscription with TradersPost is canceled or expires, and we disable your strategies as a result, then those exit signals won't come through. So you'll have to manually exit those positions with your broker.
Fair enough. The nightmare scenario, TradersPost decides just to close all open positions that we opened.
Yeah, we definitely won't do that. It definitely would leave your positions alone at that point. It would just disable the next day. You got muted, Tom.
Would it be possible to see a leaderboard of which broker connections have the largest wait list? A little competition here with the broker connection.
I didn't realize this question came through support. Was that a support question?
No, this is some of these questions Tom comes up with.
Oh, okay, gotcha. This wasn't even a Discord one?
Well, I just keep getting people. They'll ask, "Is this broker going to be available?" Then we'll tell them that it's added to the wait list, and I'm like, "Where's this wait list? I want to see this wait list. How big it is? What's the percentage? What's the breakdown?" Because I know
Oh,
there's brokers I want connections to. I was like,
yeah,
I'm not going to bother. But if I knew there was a large number of people, then I would add my name to the hat.
got it. What I can tell you is this hasn't been updated in a little while, but the most recent list I have here, I can kind of go through. I'll just say this publicly. So we've had a lot of people on the Fidelity waitlist for some time now, but it's not one that we can explore because Fidelity doesn't have an API. KuCoin had quite a bit of people on the list. Forex.com, so that's the Forex conversation. Oanda, another Forex request. Capital.com for Forex and CFDs, but we would just do Forex there, and stocks, of course. Pepperstone, that's a tough one. I know that they offer Forex to American users, but we'll have to continue to explore what might be possible there. There's a couple other futures brokers that we were considering, like AMP Global, Gemini, OKX for crypto, Optimus Futures. I'm basically going in descending order here for the list. And then we
Dang,
had
Big Get's not in there at all.
it's in the list, but like I said, I don't have a count of how many people were on the wait list since we launched the wait list for it in September of 2023. So let me get an updated count, and maybe on the next episode we can give everyone the current head count.
Excellent. Perfect. Okay, next up. This is also from me. There are certain technical limitations that exist with trading view strategies. You can't simultaneously hold long and short positions.
Mm-hmm.
You can't cancel market orders after the bar closes. You can't adjust position margin with while a position is open. You can't immediately enter a position, although you can close a position immediately. But an indicator doesn't have these limitations. Would TradersPost consider writing a library that allowed for more complex signal management in TradingView? P.S. Mike and Tom are fantastic. John's all right, I guess.
We'll take that as a sarcastic comment there in parentheses. John is obviously the man around here. So can you bring that back up again? I think what I need to understand a little bit better is how they would want to support, like what kind of complexity do we need to support in terms of signal management? Were you able to unpack this?
So the issue here is that so I had a client who had they wanted to use the backtest in TradingView, or like that was the default, and the issue was that a trade couldn't be open. So they needed a trade to be open on the open of the candle, but they needed to check to make sure that the value was above, let's say, the moving average. But you have to create the order before the candle closes for it to be launched on the open. And by the time that happens, anything that's happened on that candle, you can't change the order. It's going to get executed because it gets created on the candle before, and it's going to be a market order that launches at the open of the next candle. There's no way around that. However, if you did an indicator, then you can just have the indicator send the alert for the open at any time you want during that candle.
I see.
Which you can't do in the strategy. And then there's all these other limitations, like if you wanted to do a hedging strategy in TradingView, well, you can't develop a hedging strategy because you can't have open and short positions open at the same time. For the margin, sometimes for let's say crypto positions, I'll have 50x margin on a trade, and if I'm headed into a volatility event, I don't want that position to get liquidated. So I would want the strategy to account for what I would normally do, which is increase the margin on that position so that it can suffer the move without getting liquidated, and then reduce it again after that. The FOMC minutes is out or the CPI report is out, so that I don't get liquidated on the positions, or different types of OCO orders where I would want to create that within TradingView, but have more complex structures. So I was like, hey, if we maybe we should have a library that we just develop that just slowly grows over time, where we're adding different functions to it that allows for all kinds of different mechanisms to build out more complex strategies. And I figured if I asked live on the stream, you'd be forced in order to say yes, and I would slowly start building it week
Yeah,
by week.
particularly if you covertly say this is from one of our longtime customers who's been paying us for over 2 years now, and he demanded this request, then yeah, I think that would be the right way to perk my interest. No, I feel like that's a good opportunity for our blueprint episode to cover some complexities there and maybe get the framework started. I think that was originally the intent of the webhook message library, but it was really just to try to solve this problem of constructing the messages rather than solving the construction of real trades and overcoming some of these limitations that you find within TradingView. So I'm game. That sounds like a good idea to cover.
The library, I've been using the webhook library that we built, and I've come to the conclusion that we really need like essentially a component module that you add onto an existing one, and it's through drop-down menus that you're building this thing out. Because it was just, as I'm doing it, I go, it just makes so much more sense as opposed to having this long chain, which was fun to do programmatically, but for a regular user who wants to copy and paste into a strategy, which is most people, it'd be so nice to have this thing that shows up and you just have it and in the library you can do that. You add the library in, and then you have this chunk there, and then it's just easy to tie in the entry orders and exit orders.
Yeah, I kind of want to retire the webhook message library because of that problem, especially as our JSON messages start to change more and more over time, where we start offering more properties, more rules, more of the strategy settings will start showing up in the JSON message. And we'll even be doing things like, what are we calling it internally? It's basically a way to send a syntax, right? So like if you wanted to enter a position that's 1% above the market price, you can create a little script within the price parameter to say, take the price times 1.01, and it would calculate that before we actually send it to your broker.
Right.
So there are some ideas that I want to explore that really are aimed at just helping people construct the correct JSON messages. And then you just paste those into the settings of your strategy or indicator. And those are the correct messages that get sent over to TradersPost. So that's partly why I want to abandon the webhook message library, because that's fixed in terms of how many properties you can send to it. And I want to make it more future proof so that people can just paste in these messages.
Right. There's also this weird thing where I've been putting together this Chrome extension, not really to get it out there, but just for the fun of it, to see if it's possible. That essentially I have my TradingView running live, and it just monitors the DOM, and then I could do all kinds of things because I'm essentially getting access to real-time information and just placing orders. So the alert doesn't even necessarily have to be in TradingView. It can be in my own extension and send off. But obviously, I'm not putting that out because I think it's against the terms and conditions for TradersPost to do for TradingView to do anything like that. So I'll just leave it at that.
Got it.
Question here from Sarah again in the chat. Since TradersPost and TradingView are cloud-based, does it make sense to run both platforms on a VPS near CME futures? This is that whole thing. People ask me regularly, like the distance. Basically, they want to do high frequency trading, and they want like this proximity to the exchange.
Right.
But we don't. The cloud services that are happening at the TradingView and TradersPost, you don't have any. The user doesn't have any control of deciding where that is in proximity to the exchange. So you wouldn't be able to actually get any advantage here. And plus, they're already on TradersPost and TradingView, it's already happening in the cloud. The user has no control over that.
Right. Yeah, I think in this context, and it is a good question. It kind of reminds me of, even thinking in terms of watching the movie The Hummingbird Project, which had, was it Jesse Eisenberg and Alexander Skarsgård? Great movie, and it's all about the timing factor involved in high frequency trading, where they're using FPGA cards and trying to gain even a 1 millisecond advantage over their competition. And partly what they do is they, plow through this mountain and through the forest in order to lay fiber optic lines to get closer to the exchange. We're so far from that. The best analogy I can say is it's like it would be like for a high frequency trader, they're able to, conduct these transactions in sub 10 millisecond space. But in our domain, we're talking about 1 to 2 seconds of timing before it even reaches your broker. And so it's a massive difference in timing there between 10 milliseconds and 2000 milliseconds. So I would not be too worried about the distance or time it takes for these trades to execute. I would be focused more about what kind of strategy I can put together that doesn't need to rely on those timing factors, because you're already so far behind any of the major institutions that trade at that level. We're talking about, it's not even distance to the exchange. They don't even use tools like TradingView. Most of the logic is actually hard written into hardware at that point. The trading conditions are written into the cards themselves.
Right.
So we're playing in a different game here. Those types of considerations are really meant for that type of industry. In our game, we're interested in finding a signal that works consistently, a strategy that's robust, and that trade time should, ideally be in the, at least 30-minute range. Most of my strategies operate in the hour and a half to 4 hour range, where my entry has plenty of time to allow the trade to complete before I actually exit. So I don't have to worry at all about a 2-second entry time and a 2-second exit time.
That's a great point, that we're in a different game here. And I just want to actually bring up, I've been rewatching basically all the trading bot session videos that you've done, interviews you've done with traders on the TradersPost channel. Shout out to that series. It's fantastic. We got to do more, because the tidbits of information you get from the insights and information you get from these speakers they really make you think, and they make you really understand that the game us retail traders are in, we're not in the mining order book information. We're not in the high frequency trading. We're not in the getting the inside scoop over with some employee in some company to see what the CEO is going to like. That's not really the game that almost all retail traders are in. We're in the game of simple strategies that are taking advantage of market trends and risk management. That's what it's really all about. One of my favorite lines from the who was it? Adam Grimes. He says, the list of always true things in trading is very, very small. In fact, it might just be, don't violate your risk management parameters. I just love that. He was like, that's basically it. You remember that, and you're better than 80% of the people who are trading.
Yeah, for sure. Adam Grimes was great. I really enjoyed that interview.
All right. Almost done here. Let's go to the next. I'm experiencing issues with sending and filling options orders on Tastytrade. Specifically, when I send buy to open trades via webhook, the broker receives them incorrectly as buy to close. Similarly, sell to close orders are being received as sell to open.
Mm-hmm.
So this is something I think we talked about last week or the week before, which has to do with how options, the settings that you can have for options within TradersPost.
Yeah, you kind of have to think backwards on this. So go ahead, Tom, unpack this part of the documentation.
So just to read here, when you're trading options, there's this whole we all know when you're buying or selling a share what that means, but then there's buying and selling a call and a put that also has a different dynamic, right? So the user, you might be thinking, is one type of user who thinks to themselves, I don't care about the directional bias of the thing I'm buying. If I'm buying something, is because I'm buying it, and if I'm selling it, it's because I'm selling it. Whereas in the option space, you can be buying to express that the price will go lower, and you can be selling to express that the price might go higher. There's all kinds of complexity that happens there. And in order to account for these different types of ideas, the different types of perspectives users might have, we have this part in the documentation that talks about the options types. So specifically, if you're setting the setting to both, that'll allow you to, when you're buying calls when bullish, and buying puts when bearish. If it's set to call, you buy calls when bullish and sell calls when bearish. And when you have puts set, you are buying puts when bearish and selling puts when bullish. And so you get to decide which one of these settings, you get to decide how you're thinking about these options, if it's just about getting in and out of the position, or if you're expressing directional buys with your position, and then the orders will make sense when you're sending it to the broker. But as Cam, our superstar support member, likes to tell people, try practice this out, send out the undo the auto submit for the trades, see what the actual trade plan will set up and what you're going to get, and wrap your head around it, because under the best of circumstances, people find it difficult to understand options. I don't know if you've seen this.
Yeah.
People get so twisted. We're not even talking about writing options at this point. Like,
Right.
you can write options, you can buy options, and there's all kinds of different risks that are implied with it. So you need to test out your signal beforehand and see, is what I'm sending corresponding to exactly what is happening in the trade plan in TradersPost before you actually execute those orders at your broker.
I think that's always good advice. We always recommend using a paper account. You're more than welcome to send through test requests within your webhook as well to see how the trade would actually get executed. By disabling auto submit, that also gives the ability to see how we would have constructed the trade with your broker before it even goes there. So in case you don't have a paper account or the ability to set up a paper account for some reason, you'll have the ability to at least see what's going to happen before it gets sent. In this case, we get it. We understand why it feels like our system is backwards, because in effect, you're trying to buy a put, but we're trying to take the sell signal in order to buy a put. And the reason for that is because of the nature of how our alerts come from TradingView. So if you're trading the underlying strategy for SPY and converting that into options contracts, well, you're going to have a buy signal to go long and a sell signal to go short. We want to take that sell and turn it into a buy put contract. So that's partly why you have to think backwards on this.
Perfect. All right. And our last question of the day. Hi, my exit order just got rejected by my broker, TradeStation, while I was sleeping, so I was piling up some losses. Trying to find some workarounds around this. I can see that TradersPost doesn't retry it after rejected orders. I now set up a stop loss in my subscription. I never used it because my signals were the stop loss. If anyone has a better idea, let me know. So the idea here is that their signal from TradingView didn't fire to exit the position, didn't fire the way that they expected. And the idea here is, well, what do we recommend as a way of mitigating this if we're expecting to be out of a position, but we're not out of the position?
Still unclear why their trade didn't execute, though.
They were saying, I should have pulled up the entire thread that it was in the ticket, but the essential idea here was that we didn't get the signal. TradersPost didn't get the signal to exit.
So it never even came from TradingView.
No. It never came from TradingView. And so the question is, well, what do we do in those? What should a user do in those circumstances? Is there any backup that can be done in order to mitigate that?
Yeah.
Haven't really found it. Yeah.
Well, I mean, maybe this goes back to the timed scripts that you and I were talking about, where you could schedule a close all positions, backup. But in the case of an overnight session here, unfortunately, that's one of the dangers of overnight trading, is waking up to realize that some issue occurred. And trust me, I've lost many nights of sleep to crypto trading over the years, where it's a 24/7 market, and you wake up the next morning and realize, oh my God, I forgot to set whatever. This strategy didn't account for X, Y, or Z. So I think in this particular case, we want to make sure that you've tested each of the signals with your strategy, potentially on a shorter time frame, to make sure that each one's going to go through properly in the strategy before you set it loose. And as always, I always recommend people run a paper trading strategy for at least a couple of weeks before they go live, so that they're not waking up to, unanticipated outcomes. In theory, as long as you're running some kind of day strategy, or, a strategy that holds a position for less than a couple of days, then you should have covered all of those scenarios in that 2-week period in a paper account, where you're not putting real capital at risk.
What I do is, for one client, she insisted that after an exit signal was sent on TradingView for the strategy, send another exit signal at the close of the candle. Send another signal at the close of the session, so that there was always these multiple close options that were sent. But I have this other client that it's about, I get the signals all the time on my phone, so I know when I'm in a position. I also know when I'm in one, and I like that it's happening automatically, but does that mean this is not a set it and forget it scenario? Because any number of horror stories can happen at any part of the chain, and so ultimately, I have to always make sure that a position size, if it all went belly up, couldn't blow up my account. That was not life changing. That was not the thing that ended me, because anything can happen at any given point. I remember. Do you remember when a couple of months ago there was a blue screen of death on all the Windows? Was it all these Windows machines all over the world? All of a sudden, airports and computer systems and they were all probably even it affected us actually, because we didn't go down, but some of the brokers went down. This blue screen of death showed up everywhere, and people were like, "Oh my god, what am I going to do? I'm stuck in a position." It's like, yeah, sometimes the sky will fall.
You're talking about the CrowdStrike debacle.
The CrowdStrike, that's what it was, exactly. Yeah. And sort of like, so someone goes, "Okay, well, what do you do in a situation like that where a 3 Sigma event happens?" Mm-hmm. Well, then you have to make sure that your strategy can handle if a 3 Sigma event occurs, or that you're paying attention in such a way that you can mitigate that yourself.
Yeah. And I guess like maybe circling back to this particular strategy, it sounds like the stop losses and potentially the take profits were written into the strategy that sent an alert at the time they occurred.
Correct.
I'm honestly a big fan of making sure that the stop loss and take profit are with the broker, even if they're a trailing stop, for example. And I tend to choose brokers that support those types of algorithmic order types, so that I know for sure it's with the broker. There's no chance of it being lost from TradingView or from TradersPost. It's already at the broker, and the order is going to be executed at the broker side. That's helpful, I think, for futures. It gets a little more tricky depending on your crypto exchange, but I know like crypto exchanges like Binance offer those types of algorithmic orders, so you can do like trailing stops and things like that. So in theory, the more your broker has information or exchange has information about where your stop loss and take profit should be, then the better off you might be.
If in TradersPost I set stop loss 10%, right? 10% down. Will that act as a buffer? Like if my strategy on TradingView, it can exit the position before that 10%. Right? Because I can send a signal to exit position. Then it also. So then, will the stop loss on TradersPost act as a backup to that stop?
Yeah. Okay. So in theory, you could have like a really deep stop loss that's set that operates as sort of an emergency switch to the trade, and it could just be a stop limit order a stop market order that executes if it's triggered, right? But then if your strategy has a tighter stop loss that's based on the TradingView strategy, then you can send an exit signal with that, and it would cancel that stop market order and exit as you requested. So there definitely is a way to layer in your stops that way.
Right. We have Claudio asking some questions here in the chat. It might be a little bit too much for us to go over here, but they're referring to a volume delta indicator. But that's not our indicator. Does that mean anything to you, Mike?
No. Claudio, we'll take a look at these messages, and if you'd like to reach out to us on support, we can try to help understand what you might be looking for here. Support at traderspost.io.
Okay, perfect. All right. Is there anything else you wanted to touch on before we let everyone go for this Tuesday?
I think that's it. I just hope everybody has a happy Thanksgiving.
Perfect. And I had a happy Thanksgiving already, so thank you for not acknowledging that I'm Canadian and speaking as if I'm nobody. That's fine.
Look, the only holidays that matter are American holidays.
That's exactly right. You're absolutely right. Well, I'll be here on Thursday for Blueprint, folks, and we'll both be here on Friday. Mike with a little bit of a hangover, and me trying my best not to talk about micro strategies. Hope you guys have a great rest of your afternoon.
Cheers, everyone.